Now, even though over the long term, I intend to build out a long-term dividend-paying portfolio that has the potential to grow over time, pay me dividends, and also pay me more and more in dividends as the years go on. Even though a large portion of my portfolio is made up of blue-chip names like Apple stock, Verizon, or Realty Income, as well as high-quality ETFs like SCHD, for example, along with some ultra-high-yielding ETFs in order to get my dividend income up substantially as far as yearly and monthly with a tiny bit of money invested. So just like the title says, in this video, we're going to go through one of my favorite, relatively newer, ultra high yielding ETFs, AIPI from Rex Shares. And I'm going to share with you guys what a $10,000 investment would look like in this ETF. And keep in mind, this ETF offers a ton of income for a tiny bit of money invested. Now, this ETF is personally in my portfolio as of right now. I've only bought my first few shares, but I do plan on adding more of it in my portfolio very soon. So I figured I would make a video and dig a little bit deeper into it. So if you're interested in high yield income generation or specifically AIPI, well, then make sure to stick around, drop a like down below, and let's get right into this one. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. So for some of you guys that might not be aware of what ETF I'm talking about for this video, AIPI, or the Rex AI Equity Premium Income ETF, this is a relatively newer ETF, but at least so far has offered a positive total return, which I'm going to share with you later on, and as of right now offers a distribution rate of around 35%, which is insane. Now, without wasting any time, going into the fact sheet for AIPI so we're all on the same page, and like I said, because I personally am planning on adding a lot more of this one into my portfolio probably over the next year or so, I want to dig into it very deeply and understand exactly how it works. So it says the Rex AI Equity Premium Income ETF, or ticker symbol AIPI, combines artificial intelligence, stock exposure, and potential for income in a covered call ETF. Now, right off the bat, I like the idea, and this is simply because a lot of the AI names like NVIDIA, names like ARM, names like CrowdStrike, for example, these names are very high beta, which means they're going to offer a massive amount of premium, which also means if you're writing covered calls in them, there's going to be a ton of income potential, at least theoretically. Now, it then says benefits of this ETF AI exposure. AIPI provides exposure to the leading AI firms within the BITA AI Leaders Select Index, providing a strategic approach to artificial intelligence. Number 2 is potential income generation. AIPI aims for a monthly income generation by selling out of the money call options, harnessing AI's volatility while capping some of the potential stock gains. So this is like what I was saying earlier, because again, there is so much volatility within at least a lot of these names, there is going to be at least potentially a ton of income to be earned. And when I share with you guys the actual distributions this ETF has paid so far, you're probably going to be shocked. Now, along with that, there is going to be a capped upside because of the covered call overlay. So, of course, if you're not necessarily interested in income, if you just want some growth, well, then, of course, a lot of these names probably will do pretty well in the future. But, of course, we can't say for certain. Now, it then lastly says partially offsets declines. AIPI uses this covered call approach to partially offset the effective price decline in the underlying security. And this is simply put because of the option overlay. If there is a downturn, the covered call is going to help at least somewhat. Now, the ETF has been trading since about June of last year. So, again, it's very, very new. We don't have all that much data to go off of, but the reason I personally like it, at least so far, is because it makes a lot of sense. And for me personally, I really don't have all that much exposure to names like these, which I do want to add some to my portfolio, but why not do so in a covered call manner where I can earn a lot of income and potentially even offset some volatility. Now, the gross expense ratio for AIPI is 0.65%, and the net assets are around 55 million. So it's relatively small, relatively cheap considering, but again, so far what I've seen, so good. Now, speaking of the top names in the fund, names like ARM, NVIDIA, CrowdStrike, Palantir, Broadcom, Intel, AMD, etc., etc. A lot of names that maybe you guys already have a ton of exposure to, but just for me personally, I mean, you guys have seen my portfolio. I really don't have all that much exposure to several of these names, which again is why I don't really mind having some exposure to this ETF. Now, I think it goes without saying that these names are higher beta than a lot of other names that I personally hold in my portfolio, and a lot of you guys can probably relate to that. So we do have to be ready for a downturn, and we do have to be ready for probably some larger swings when it comes to AIPI's share price, and that's just going to be part of it if you ask me. So now that we have a basic understanding of how this ETF works and how it earns income, or at least potentially how it earns income, looking at some of the distributions, at least as of so far. Now, again, because of those AI names and because the cover call overlay, I think we're all sort of expecting some massive distributions, but for an ETF that costs around $50 per share, we're talking $1.48 on a monthly basis per share, $1.46, $1.48, $47, $51, and $49. So more or less $1.48, $49 on average over the past 6 or so months. Not bad whatsoever, very consistent, along with the fact that of this ETF, at least as of so far, doesn't have massive NAV erosion. Which brings me into the next part of this ETF, the NAV erosion or NAV decay, or simply the idea of this ETF losing massive value over time. Now this is of course going to be a worry of mine, especially with an ETF that's yielding say 10, 20, 30% per year. I mean, with that much yield, we've seen it in the past, a lot of times you're going to see massive NAV erosion. Now on the max time frame, this is since about June of last year, this ETF is, to be fair, down around 4.7%. So has it technically decayed a little bit? Yes, it technically has. And the thing that worries me about ETFs like these ones, because they buy into these high beta names, which are great for selling covered calls on because they offer so much income potential because of the volatility and option premium pricing. But the problem is with that covered call overlay, once an ETF like this one drops down in price, let's say during a bad red day or two, or 3 or 4, it's going to be tough for it to reclaim its previous levels. And this is simply because the covered call overlay caps upside potential. And we've went over this in the past when we've talked about names like TSLY and other ultra high yielders with those underlying names that are very high beta. It's hard for them to reclaim their previous ground. But in my opinion, and of course I could be wrong, I think a lot of these AI names are going to do relatively good in the next year or 2 or 3 or 4. I personally believe in them. So for that reason, I don't think we're going to see massive sustained red days when it comes to these AI names. Now, of course, I could be wrong, but that's what I'm betting on. But all said and done, the ETF is down around 5%, which isn't great, but not horrible, especially when you're talking a $1.48 per share per month distribution, which obviously offsets this minus 5% by quite a bit. Now, before I go through and share with you guys what the total return of this ETF has been so far since inception, which I guess is the most important metric if you're looking at its performance, how well it's done. With a $10,000 investment into AIPI, theoretically you could buy around 200 shares, which is not bad whatsoever. And because as of right now, or I guess as of the last several months, the ETF has been paying around $1.49 per share per month. That means with a $10,000 investment, we're talking almost $300 in income per month, which is insanity. Now again, things could change in the future. This ETF could change the payout amount. This ETF, just like any other one, could also lose massive share value, especially because this ETF does have underlying stocks that are pretty high beta. But overall, what I've seen with AIPI, and because I do believe in AI names, especially the names that this ETF holds on to for the most part, I'm planning on using a very small percentage of my overall cash balance pretty consistently over the next few months and grabbing a share here and there, dollar cost averaging down, because I honestly love the covered call strategy. And like I said, I just don't really have that much exposure to AI stocks. Now, last but not least, has this ETF even made investors money historically so far over the past 0.59 years that it's been trading? This ETF, with dividends being reinvested, has offered a total return of around 18 or 19%. Now, even with them not being reinvested, we're still talking 17% overall total return. Not bad whatsoever, especially because this ETF is offering a massive amount of income potential right from day one, which a lot of other ETFs are not going to do. Now, all that being said, I personally don't have the risk tolerance to have that much exposure to AI names, even with the covered call overlay. So this ETF, in my opinion, is always going to remain a very small percentage of my overall portfolio. So now that we went over AIPI, the Rex AI Equity Premium Income ETF, and I share with you guys how this ETF works, what it's done historically so far, and my personal opinion on it, I lastly, most importantly, want to hear from down below. Are you personally buying any shares of AIPI? Let me know yes or no in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.